Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
The concept of safe haven assets has been turned on its head in today's fast-paced market environment. For decades, we've relied on gold and government bonds as our go-to safe havens during times of market turmoil. But with the emergence of Bitcoin, that logic is being challenged like never before. So, what makes a safe haven asset? Is it still about low volatility and downside protection during a panic? Bitcoin certainly doesn't fit that bill. In fact, its value can be quite volatile, and many investors view it as a speculative asset. However, despite this volatility, Bitcoin has staged an incredible run since the COVID-19 market lows. Let's take a look at some numbers to put this into perspective. Since March 2020, long-duration bonds have actually lost 50% of their value, while gold is up around 90% over 5 years. Meanwhile, Bitcoin has risen by over 1,000%. That's quite a difference, and it highlights the changing landscape of what we consider safe haven assets. Now, some investors might argue that Bitcoin is not a safe haven asset at all. It's too volatile, too unpredictable. But others see things differently. They point out that Bitcoin is globally liquid, decentralized, censorship-resistant, and immune to tariffs or central bank policy. In an era of geopolitical tension and financial repression, those attributes start to make the asset look more enduring than other safe havens. But what about traditional safe haven assets? Gold's gains are looking less impressive when weighed against the scale of monetary expansion. And long-duration bonds aren't faring much better either as the 30-year Treasury yield approaches 5%. It's like we're seeing a shift in the way investors think about risk and return. Bitcoin is actually holding its ground on a risk-adjusted basis, performing no worse than traditional safe haven assets like gold or TLT. And when looking at recent crisis events, a pattern emerges. Each sell-off in Bitcoin has marked a significant long-term bottom. It's as if the market is recognizing that Bitcoin has become a new kind of safe haven. So, is Bitcoin a safe haven? The answer isn't a simple yes or no. But what it is telling us is that our definition of a safe haven asset needs to change. We need to consider assets like Bitcoin that offer durability, neutrality, and liquidity in an increasingly uncertain financial world. At Bitcoin Bulletin, we're keeping a close eye on this shift. And with the market in constant flux, it's more important than ever to stay informed and adapt our strategies accordingly. Whether you're a seasoned investor or just starting out, understanding the evolving landscape of safe haven assets is crucial for navigating the markets ahead.